All right, everybody, this is John. Welcome to the free video, and we'll look over a couple of indexes here. On the left side, we're going to be looking at the S&P 500 on a monthly chart, and you can see, of course, the squeeze here that fired at the beginning of 2017. This squeeze that fired off, obviously, that was an incredible run, and there's another squeeze setting up. You'll notice, of course, this time the momentum is down, and the question is like, okay, does this mean that we're about to crash? Or what is about to happen here. And a lot of times with the squeeze, you can go back and kind of look at prior times. It was like this. And so I remember this for 2008, and we came down, we came down, we came down. The squeeze fired, and then we got the crash. Okay, so is that going to happen this time? Believe it or not, I actually don't think we're going to see that. I mean, I know we're seeing it can look similar and stuff like that too, but remember, a lot of this was driven by the bad housing market or all the subprime home loans. And in real estate, everything's tied into real estate. A lot of people's wealth is tied into real estate. A lot of people that have jobs have jobs in the real estate sector. And so when real estate takes a nosedive like that, it gets really bad. Because remember, real estate dove first, and then it impacted everybody else, and it impacted the economy. So I'll come back to that because I know there's other stuff out there that's bad. What I think it'll be more like is, I think more like this. So here we had a squeeze, it fired, we made a lower low, and then ultimately this bottomed out. This was of course the dot-com crash right there. And then, oh, it doesn't go back that far, but actually what we're really looking at is a lot like 1970 to 1974, but I am not able to, well, hold on. All right, so I got the SPX. So here you can see, of course, this is when it was trading at 40, right? But 40 to 80, that's a double. So here it was a bull market in the 60s, and then we get to the 70s, and that's when we start having, all the inflation, stagflation scares, and you can see we come down to the 200 SMA on the monthly chart. We come up, we make new highs. We come down, we make lower lows. Pretty nasty squeeze right there. And then from there, I think that was it, right? Yeah. And then from there, in the 80s, that's when inflation kind of peaked, and then things took off. So while I'm not, and then here we are, right? And then while I'm not looking for, we're going to take off and make new highs anytime soon. I do think that if we zoom in on this, we're in kind of a situation here where, first of all, we're range bound. We've been range bound since June, and I think we're going to be range bound for quite a while, and I do think that we're going to actually test the upper end of this box before we come down and test the lower end later in the year. So that's what we got there, and just kind of keeping an eye on that. And then the other thing I wanted to take a look at here too is gold. So gold is in an area now where it's time to shine. And again, if we look at the monthly squeeze here on gold. This is very similar to the last squeeze where we had this long squeeze. It was kind of ugly, and then we got the yellow here, and then we spiked up. And so here we can see, okay, it was kind of ugly, and it's this kind of the same pattern. So I think the idea here that we can retest the highs, possibly make new highs this year, is certainly in the cards because now we have the right environment for it. The dollar's not exploding. The dollar has actually come off quite a bit. Inflation staying sticky. That's positive for gold. And so that's an interesting one as well. And let's look at one more. And one thing to keep in mind here, because I get a lot, I get asked a lot of questions about stocks like Tesla and stuff like that. And my take on these is that this is the kind of stock that does great in a quantitative easing environment, and in an environment like we have right now, it's coming back to what I would simply call a normal valuation. We saw this in 2000 after the 2000 crash, and this happened for years. So I don't think Tesla is for years going to be doing much other than consolidating here and kind of digesting what's happened. And I look at that for most tech stocks, and I do think that once the Fed starts cutting rates, which they'll have to once the economy does start to slow down, probably in if they're cutting rates, that's probably going to happen in 2024, then we'll see this go up. So what's the point of this? Find new stocks to trade if you're doing it on the long side. There's plenty of stocks out there that are doing well in this environment. Here's Caterpillar. I always say, like, go where the money is. And in this environment, the money's not flowing into tech stocks. It's flowing into other stuff. And one easy way to find that is, look for new 52-week highs, different things like that, and you'll see where money is flowing. And if you're looking for long trades, focus on that. And then if you're looking on short trades, focus on the indexes and keep it simple. All right. Hope it helps. Have a good one, and we'll see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.